Welcome to another edition of Cattle Call. I'm Susan Littlefield here on the Rural Radio Network. First, an apology to all of our folks that tune into this on a weekly basis. We're actually recording this on a Friday, and I do apologize for the lateness that this is coming out. I was out of country with the folks at Nutrient Ag as I got to see potash coming out of a mine. So I was on the road traveling out of country, and Brad Kooima is on the road. He is taking some much needed time off and is spending time with some friends doing some hunting. So we bring in the next best thing, and that's Joe Kooima. He's going to fill in for Brad this week. And really, the market's got a lot of unknowns that are on there. We're going to talk about what's happening in the cash market, what made the cash do what it did so far this week. So let's start doing the unpacking. As I mentioned, Joe Kooima is with us this week. He, of course, with Kooima Kooima Varilek out of Sioux Center, Iowa. So let's talk about, when you and I were talking before we even started this program, you talk about really how hard it is to describe what this market is doing this week. There's so many factors that are weighing in them. Many we have no control about, which we'll talk about, and that obviously is next Tuesday's election. But cash is just kind of quote unquote fine at this point, Joe.
Right. Well, thanks for having me on. Thanks for letting me spill in here. Great question to start. There's, like you said, there's a lot to unravel here quickly since Tuesday. I kind of relate it to having one of those reports, whether it's a hog and pig report, cattle on feed, or a grain report, that you're kind of hyped up, like expecting the numbers to be a certain way, then it doesn't show that way. So then the market reacts counterintuitively to that to a certain degree. So Monday, coming into this week, we had a good cash market last week. We crept it higher, 1 to 2 higher, and that was kind of the lead in type scenario that we were expecting to have this week. And then Tuesday rolled around, and there was starting, some 190 started to let go of some cattle, which is still a great price. Some of them were shipped south. So just that expectations of having a better cash market and kind of feeding off the boxes is where we maybe got ourselves hung up a little bit. But like you said, cash is fine. There's 190 up north. It's in the south. We're shipping cattle from up here down to the south as well. So all that is good. And that helps keep us pretty cleaned up here as we're not really backed up at all. But it just kind of helps keep things pretty tight up here. So that's kind of the first little springboard that we had on this little bit of a sell-off. We did put a key reversal lower back on Tuesday as well. So then you got a little bit of a hiccup on the charts to contend with. And then one thing we forgot to mention before this too is that, we had end of the month type stuff too. And that can always kind of foil a little bit of a trend. So we had to take that on too as well.
When you talk too about the packers kind of out there chasing the grade, we're current, but what type of grade are we dealing with right now as they procure those cattle for slaughter?
Right. In the South, I hear that they're finding a very tough time trying to get some of that choice stuff. So it's not uncommon for them to buy some cattle in the North that maybe have a few more days on them, but I don't think we have more days on them by any means, but we just have the better cattle up here in the North. So they're willing to ship them down south. The choice select spread is wide. The last couple of years, it's been actually this wide too. So that's what they're chasing. That's why they're willing to put some wheels under them and get them going south so they can capture some of that profit there.
Okay. Well, we look at, you talk about the way this cash started. I think Monday there was a lot of high hopes. We could have seen some higher dollars. I mean, nobody's going to complain, at least steady money. And we saw that change. And to see a Tuesday sale is not something that's been the norm as of late. So let's talk about that little bit of trend and the hopes that kind of for some maybe got a little deflated as this trade week has gone on.
Right. Deflated would be the key word there on Tuesday when we started hearing the 190. Like I said, it's still a good cash trade. We just had a little bit higher expectations. The one thing that we've gained back here in the North now, for hedging is that we have our basis back. So that might make us, I wouldn't say an easier seller necessarily, but now you got a discounted market. So of course you're going to get rid of cattle when you get the bids out there, the board's below the cash price. So we might have to phase into that a little bit, but that's also going to keep us, as tight as what we are up here in the North. So that's something we'll have to kind of dive into next week to see, if we keep that basis or what we got to do with that.
What's your takeaway of the boxed beef as of late?
Well, the boxed beef was a good indication the last several weeks that kept the market moving higher.
Mhm.
but it did rip higher and without a whole lot of corrections. So having the boxes a little bit weaker, it's understanding when you have such a big rally that you have to give some of that back, because eventually you make it high enough too quick that we have to back off. But unfortunately, having the last $5-6 higher the last couple of weeks with the boxes and the boxes turning over, we're going to trade that on the futures idea as well. So you look at some seasonal stuff, and we do tend to maybe dip here just a little bit. We have this big run higher, and then we have to figure out if this market's going to go sideways and check out if we're staying current, which we are. But these waves continue to climb higher, and that's not because we are backed up by any means. It's just continuing to have this phenomenal weather, and the cattle are just doing it all.
Like it or not, and I know the other unknown in this market, and it doesn't matter where you turn, it's a conversation, and that's next Tuesday's election. And next week when we do this report, we'll obviously know the outcome, but this unknown of the election and how it's weighing in on agriculture. What's your thoughts, and kind of where do you see the market going the next couple of days till we get through the election?
Yeah, it's the unknown, or that nasty word of uncertainty, and the cattle market just doesn't do a very good job with that. So we definitely always had jitters, even a month out or a month ago from this, but it seems like once we got inside a week from Tuesday, that's when we really started to take on more questions about it. I don't know what's going to happen. Are we going to know next week? I doubt it. It could, I'm old enough to remember the whole Bush Gore thing and how long that took to count. So I'm not having hopes that we're going to know right away at all. So that might just cause some more uncertainty. And I don't know. I don't have the answer for that at all. But there's stuff that we can do. But
if you and I had those answers, we'd be in a totally different business than what we're in right now.
Right on.
Well, I appreciate you, Joe, taking some time to talk to us. What's the best way for folks to get a hold of you guys?
Oh, they can visit our website, kkvtrading.com, or just give us a call here, 1-800-358-3047.
All right. Thanks so much. Joe Kooima joining us this week for this week's edition of the Cattle Call. By the way, I'm at NCC The Classic. So great cattle shows that are taking place over 4 days in Kearney. If you get a chance, come check it out. A quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's another edition of the Cattle Call on the Rural Radio Network.